Monday, December 9th. Market analysis, Stan Ehrlich. I always start out with stock market indexes and go to futures and with stock I've been tracking for a little bit. And some other topics like this Friday, I will be detailing time of day and date for the three different entries for the Santa Claus rally and the exit strategy as well, and show you the historical track record so you can decide for yourself whether you would be interested in making the Santa Claus rally trades this year or not. Here we go. E-mini. I always start with the E-mini. Overbought conditions now for approximately 4 days, including today, but we are starting to see the markets start to slip a little. Friday's low was lower than Thursday, and today's low is lower than Friday, which means below Thursday as well. So we're at a new low, a minor one, for a couple of days. Nothing super bearish, nothing particularly significant about that. Overbought conditions usually do exactly what it's doing now, slip off a bit. I'm not bearish, but I am looking for a correction to come into the Christmas, just before Christmas, about 2 weeks from now, time period. So I think this may last about 2 weeks, this dip. First stopping point is not very far away, 60.50, but that's not going to hold. We're going to come down, I think, as far as 59 and a quarter, and maybe even a little bit lower than that. We will have this bull trend line to deal with on the way down, so we'll see what happens when it gets close to that. But I'm looking for a bit of a dip here, similar to what we saw for a couple, 3 weeks, 2, 3 weeks, back in mid-November to a little later than that, and about October 17th until about November 4th. And there's another little dip there and another one here. This one's pretty big. So the July-August dip is larger than what I'm looking for right now. Let's go the 1 minute chart on the E-mini. And here we are. On the way down, broke a minor amount of support, which showed up from the trading range on Friday. That got broken. No big deal. Very, very, very minor. But the fact that it's starting to slip and showing no sign of turning up at this point lets me continue to expect a little lower. Not dramatically, not super fast, usually. So what about the SPY? Same story, overbought, starting to slip a little. Yeah, just today it's getting a new low for the past 2 or 3 days. And closing a very small little gap almost. But I'm still looking for, 600 and probably down to the area of 586 on the SPY. And here's your 1 minute chart. And this does not look particularly bearish, but again, it should, I think, lead to a couple of weeks worth of dip. QQQ. Overbought, did gap up, significant gap, not closed yet. First stopping point on the way down, 517, but again, I don't think that's going to stop it. You got your trend line to deal with here, and you got a support area that has a good likelihood of stopping the decline, a little over 500, 503. And we're looking at the 1 minute chart on the QQQ, kind of holding up fairly well. Bounced off some support for the last 2 or 3 days at the moment. The daily data on the NQ did make, and this is the first index on the daily data chart to make a higher high. And it is overbought. Therefore, if it gets below yesterday's low, Friday's low, we will have a bearish engulfing ER red sell signal similar to this one, and this one, and this one, and this one. So that could be the sign that all of these are going to do what I'm talking about right now. I haven't got a bearish engulfing ER red sell signal yet, but it's not far from it. Let's look at the 1 minute coming down. Just got to get below 21,425. And that'll do the trick. Next, no higher high here, just overbought for a couple of weeks on the Russell, or I'm sorry, the YM, Dow Jones. So we're now on the high and low, all of it out of the overbought territories and starting to make new lows for a week and a half. Minor gap to close at 44,465, 44,465. Then we've got a little bit of support showing up at 43,568. Then you've got a bull trend line underneath the lows since August showing up at 43,014. And what I think is possible, because this has started to go down earlier than the other indexes, 42,046. That would be my best expectation for a bottom in a couple of weeks and a turn back up. But it does look like a lot of move down in just 2 weeks. So I'm a little skeptical about that. And the 1 minute chart shows some current softness, weakness in progress. And we're making new lows for this session right now. And now we're looking at the Russell. It got up to major historical resistance, stopped at the top of the area, and that was on November 25th. And since the overbought condition with an upside exhaustion gap in an overbought condition at resistance, we've been coming down. Now, the last couple of days, we're going kind of sideways. And this, a little bounce here, it doesn't really matter too much. No reversals, not much going on. And in fact, it's actually a little lower on the day right this moment. If we had a bearish engulfing today, it would not turn red because we were not overbought. But it tells me the market's supposed to work a little lower very quickly, bearish engulfings. And we're looking at the Russell 1 minute, kind of coming down like the other indexes. No particular surprise here. Bonds. One of the markets that I've been watching that has cooperated with my expectations for now about 2 months straight, including the downside objective, which went a little further than I expected, took a slight bit longer, a couple of weeks longer than I expected. But the giant 2-year double shoulder, head and shoulder bottom is happening so far. All we have to do is come all the way up to 126, 125 something. It goes down, this neckline goes down a little bit over time. And if that is broken, that neckline is broken at the appropriate price on the appropriate day, which is going to be at least, I would think, a month from now, we will have a minimum upside objective of almost 150. It's going down a little bit over time. So I used to say a little over 150, but now it's a little under. So what? It's a huge move. And for the 10-year notes, it's the same story, same pattern, same length. All that's different here really is the numbers. Minimum upside, long-term objective, maybe it'll take a year from now, 126. And again, the next line goes down a little bit over time, so I can keep lowering this green line slightly. Matter of, I'm guessing, a couple of ticks a day, not much. We're looking at crude. Between a rock and a hard spot, a lot of big sideways here on this continuation contract. Support has held. Resistance levels of various types have stopped the market rallies. Last big signal we got was a sell signal on the top of the market exactly. I think it's going to challenge the support at 66.5, break it, go down to 63.5, break it, and keep on going. Next, same kind of comment for heating oil. Got no reason to believe it's getting ready for a rally. We're not close to oversold in crude. We're not that close, a little closer to oversold in heating oil. But support is where we're at. So a little bounce is happening. No surprise. How far will it go? Not very far. How long will it last? Not very long. So I think maybe this week it'll top out at 2.27 if it can get there in the first place. Looking for new lows, looking for lower levels, looking for 200, 2.0 to be tested, and maybe down to 1.7. Next, we got a nice little gap up today in natural gas, rallying all by itself. Nice rally. It did not yet, very close, get us bumped out of the previous short position. I need to explain here a little bit. You can see that the STS smart trailing stop was down here on Friday's close, waiting for the new session to open. But the new session opened way up here. We have what's called gap code. When it opens above our protective buy stop, we move our stop instantaneously so we're not out and wait for the market to either hit the new higher stop. You have no choice really. Or do what this is doing. The opening was at the high of the body. The little blue, sky blue magic marker here at 3192-ish is the current quote. So you know it opened there and is currently here and ran up real quick to that high, which just missed our stop, which is just a little higher than the rally high, the top of the wick. Then it came all the way back down, now at the moment below the initial stop on the close of Friday. That's great. In fact, it's actually come down lower than that. I think we may have dodged a bullet. That's what gap code is all about. And it works pretty damn well and saves a lot, often. Next, we've got a rally up. We're not in a trade in gold, silver, platinum, then copper. Then we're going to go to grain and meat. We got a rally in gold. Wasn't oversold. Just came out of the blue, sort of. Not really trusting it very much. There is a possible head and shoulder top in gold, silver, and platinum. We have a ways to go for a breakout in gold. It's the furthest down of the all three precious metals. But if it works, we're going down a little below 2,300. Silver, nice rally up to resistance, getting very close to overbought, which is 75 in my custom RSI, not Wells Waller's original 70. I learned RSI from Wells Waller, stochastics from George Lane, Williams percentile from Larry, Bollinger Bands from John Bollinger. All those people started lecturing on the circuit in the late 70s, 80s, 90s, and through the millennia. Not so much so lately. Did the money show in San Francisco at the beginning of the year. Anyway, I think this rally is going to stop. Looking for a failure of this rally and looking for the market to move back down. Almost overbought. Next chart. Hit a little resistance very accurately, stopped and then pulled back a little, but still higher on the day. Platinum. Head and shoulder top formation is still viable. We need to go down to break the neckline, and if that happens, minimum downside objective would be about 800. Waiting for it to break out or change my mind. Still looking for a move down. High-grade copper. Rally. We're almost stopped out, not quite. If we have a high here and it goes down to make new lows below the last few days with the lows, I will lower my stop. Right now, there's not much point to it. It'll be a great trade if I get kicked out, or greater trade if I get out lower later. But we're short from the high day. Bearish engulfing ER sell signal September 30th, the red line, the red bar up there. When you see green, you mean buy. When you're seeing red, you mean you sell. It's a sell signal. Next chart. Soybeans, oil, meal, corn, wheat, and then cattle, hogs. We are at support in soybeans. I fully expect it to be broken. We do have at the moment an outside down day. Bearish engulfings usually push prices lower. I think it's going to get broken this week. The support level at about 977, and that tells me the market's about to have a free fall. I won't be surprised to see it come down below 950 very soon, maybe this week. Soybean oil bounced a little. Doji inside day today, doesn't mean much, but resistance has stopped the rally on Friday and today. And I think it's on its way down to break support and challenge previous lows and head into new low ground substantially. What about meal? Well, soybean meal already made a new low since February, but it did bounce back. It was at the bottom of the support area, and that's about all I got. So if it rallies a little bit, then we have these trend lines to deal with and resistance levels to deal with. I don't think it's going to rally, if it can in the first place, for very long or for very much, and I'm looking for new lows very soon. Now, what about wheat? Corn first. Corn is challenging resistance on a rally. It's kind of the opposite of beans, oil, meal. And it's looking a little better, and there is a possibility that the head and shoulder bottom I've been talking about since July, and then the bottom being August 27th or 6th, and then October 17th for last shoulder low, which has a buy signal, ER, bullish engulfing green buy signal. Also on the shoulder low almost here, and not quite on the bottom too bad. You know, if it had gotten a little bit lower and those two prices are exactly the same on August 27th, I would have had a buy signal on that day, almost positively. Look how close to 25 it got. Okay, but unfortunately, didn't quite cooperate. So the code doesn't change the color. This is not close to, maybe, if, almost, it has to be yes or no. And then it turns red or green. Code is not ambiguous. It's very exacting. So corn actually has some bullish tendencies here. Let's see what happens. I've been going back and forth on corn. I can't seem to trend lower, can't seem to trend higher at the moment. And that's essentially from the middle of October, all of November, and now into December. What about wheat? Well, it challenged the lowest low for years just a few days ago. This is a bounce out of oversold condition at a support level, possible broad double bottom. Don't think that's going to work. You got to go all the way up to 635 in order to break out of the double bottom, and then you've got an upside objective of 7.25. I don't believe it yet. I don't think that's about to happen, but this is how it starts. If you were hell bent to believe that's the low on a very long-term broad double bottom, then you're good so far. New highs, but it's only been a few days to a week. Not a lot of evidence of a bottom. So I'm still looking for a failure of a rally, challenge of lows, and new lows. Cattle. Bullish engulfing today at the moment, not oversold, so you're not getting a signal like we did at the very bottom, almost the very bottom of November 15th. We are stopped out of that November 15th longer-term trade, which lasted a few weeks with a profit. Nice. Not great, but nice. And now we're starting to go back up a little again. I don't know. I don't feel comfortable about coming up with some really great comments about cattle, but I will say the resistance area that is the high yellow zone, this one up here, has stopped it once, twice, 3 times, 4 times, 5 times, 6 times, only this year. So if it starts to break below 184, you're probably going to go down a chunk like 176, but pass for the moment. What about Miss Piggy, hogs? Higher high, trading a little lower at the moment, no bearish engulfing. And if it does have a bearish engulfing, I still won't get a red sell signal because we weren't overbought within the allotted number of days. So double top, maybe resistance line, definitely. Overbought conditions have turned it down. Will it go down more? Yeah, I think it's going to come down to 82, 85. And I wouldn't think that that was necessarily going to hold. Okay, what about SQ, the only stock that I'm monitoring? Thanks to a friend of mine, he clued me in. This is really a great long-term bullish pattern here. You got a complex trading range for quite a long time, about a year. And then it dropped into new low ground, not too badly, from 50 down to 40, found a bottom, and came back up to the same trading range for about exactly a same year again. We just recently, a couple of weeks ago, broke out in a new high ground for over 2 years, and it made new highs again and then again. Right now, we're losing a little bit. Overbought conditions. Not surprised. Maybe it'll dip down to 89.80. Could be a buy there, maybe. Even a little more of a dip down to 86 could be a buy. But I like the intermediate to longer term trend. It's just overbought at the moment, implies you're going to dip a little. There's so much great support just a little below this market. And I think that's going to be it. Back to the E-mini. Look at the 1 minute, see what it's done. Not much since we began. You guys have a great day and profitable trading to you.